Yeah,
Okay.
no worries. Good morning, sir.
Good morning. One minute, I'm unmuting you. Okay.
Good
So
morning, sir.
now, good morning.
Sir, one doubt, sir. The manual BRS, the
Hmm.
statement opening balance, the previous statement closing, what we given is, I am not remembering it. So, how to find out any way, sir?
Previous, it will tell na,
It's
the T
saying is
code
that the
needs.
amount is not tallied. That's only showing, but amount is not showing, sir.
Hmm. So you go to FF67.
FS 67.
You
Okay, sir.
have an overview option here. Click on overview. It will show you what all the things you have done for your company code. What is our company code?
Is that
ZAPL.
APL? Okay.
It will show like this,
Okay.
opening,
Oh,
closing.
these are okay. FF
See,
67 only. Okay, sir. Okay.
same.
Okay.
FF67 overview,
Overview. Okay. Thank you, sir.
right? Okay.
Thank you.
Sir, in overview, it shows statement one, two, three. It means that three statement has came, so we have to put statement four for the next entry.
Of course. You have to follow the statement number wise, na? You
Yes, sir.
cannot miss one statement in the middle, right? Because there is a connection. So this closing balance will become this opening balance like that.
Yes,
Understand
it
that?
shows in overview, right?
Yeah, it
Like
shows in
this.
overview. Yes, here. Correct. Here. If you click on overview, here in FF67, click on overview, give your bank key and account number, click on overview and go to your company code. When you
Yes.
click on it, it will show you. So this is the opening balance, this is the closing balance. This is statement 1. So this closing balance is becoming the opening balance. This closing balance is becoming the opening balance. That is the connection between the statements. Okay?
Okay, so it means four statement is done. Today, if we do, we have to write five. Yes, sir.
Yes. Yes.
Okay, sir.
Okay?
Thank you.
Yeah. Okay, so today we will start with the asset accounting. Okay, put the heading asset accounting, asset accounting. This is the next subledger, correct? So already we completed AP subledger, we completed AR subledger. Now we are doing asset accounting subledger. It's a subledger, correct? So whenever I say subledger, what you need to understand? One, you need to remember which process you remember.
Reconciliation
Correct.
process.
Yeah, correct. Reconciliation process. Correct or not? Yeah. Whenever we say subledger, reconciliation between
Subledger and general ledger.
general ledger. Correct. So here also we have a reconciliation process. Correct. So in AP we have seen reconciliation process. In AR we have seen reconciliation process. Now in asset accounting also we have a reconciliation process. But this is little complicated. The APAR, as I told you, no, they are mirror reflection. They are almost same but opposite side. But asset accounting is not like that. Asset accounting is little complicated. Why it is complicated? Because if you see in AP subledger, if you see in AP subledger, what was there? Vendors were there, na? And
Yes.
vendors, what we do? We buy and pay. Correct or not? Whenever we buy, we will credit that account, and whenever we pay, We will debit their account. So simple, na? Over. Correct or not? Accounts AP subledger, vendors we buy and we pay. Whenever we buy, invoice created, credited. Whenever we pay, vendor debited. So simple, right? Same way in AR subledger, you tell me guys, who will be there?
Customers.
Customers. Customers, what we are doing?
We sell and collect
We sell. Whenever we
and receive.
sell, we debit. Correct or not? Customer, we
Yes,
debit.
sir.
Yeah. And when we receive, what we do?
We create that
That's
customer.
it, over. Finish. So simple. Correct na? Yeah. But coming to asset accounting, coming to asset accounting. Asset accounting, can we buy the asset? So in asset accounting, what is there? Fixed assets. Correct or not? Assets, you know, the plant, buildings, the fixed assets, no? Furniture, land. Correct or not? Yeah. Some noise is there, background noise.
Devendra.
Devendra Sahu. Yeah. Sudarshan Reddy. Okay. Ganesh, any problem? Okay. Right, let's proceed, guys. So asset accounting, we have fixed assets we have talked. Correct. Yeah. Now other assets are there. Bank is there, cash in hand is there. They are general assets. They are not fixed assets. No? Yeah, I'm talking about fixed assets. Okay, now tell me, assets can we buy? Can a car is there? Can I buy? Assets can we buy or not?
Yes.
Yes, sir, we can
Yes,
buy.
sir.
Okay. Can we sell?
Yes, sir.
Yes.
Of course. So
Yes.
you can buy, you can sell also. See, we have we have different transactions, many transactions here, not one transaction. Correct or not? So the complication in asset accounting is stemming from here. Na? Complication in asset accounting is because we have not one transaction, we have many transactions. So we can buy an asset, we can sell an asset. What else we can do with an asset?
Scrap
We
it.
can we can scrap an
Depreciation.
asset if we don't
Mortgage.
if not
Yes.
We
scrap.
can take loan on assets.
Mortgage,
Mortgage.
yeah, mortgage, yeah. Next,
Depreciation
lease
appreciation.
or hire or rent an asset. Correct or not? Whether you can rent or you can take on rent. Next, what else can you do with your asset? You can develop the asset. No? Correct or not? Now I have a building, 3 floors is there. Can I construct the fourth floor? Of course, yes. Next,
Transfer.
you can transfer. Yes, you can transfer the asset. Correct. Next, what else? What else can you can buy? You have to depreciate the asset. You know the
Yes.
depreciation.
Yes, sir.
Yes.
Assets will depreciate over the value, right? Over the period, right?
Yes, sir.
Correct. Good. Next, then we can reevaluate an asset over the period. Asset, some changes are there. Market value different. Our account showing different. Then we can
So
reevaluate
some
our asset.
depreciation, sir.
Correct. Appreciation, depreciation. Next, yeah. So like this, many transactions are correct. You can scrap the asset. You can transfer the asset. You can depreciate. So many transactions. So for all these transactions, again, you have to take it into your accounts. You understand? See, here there is only one AP, only one transaction. No? Only one transaction. You buy, you pay. Happy. You sell in AR, you sell, you receive. Happy. But here you are buying, selling, scrapping, mortgage, lease, develop, transfer, whatever. So what do you think? Reconciliation process will be simple
Not that
because
much.
because all this you are posting in the all this you are posting in the which subledger? In asset accounting subledger. Correct or not? Agree? Yeah, but this has to be updated, taken to the where you have to take it.
Main ledger.
General ledger.
General ledger.
Correct or not? So reconciliation flow we have to describe, we have to configure. Is that clear? Yeah. This is one point. So in AP only one transaction, in AR only one transaction, but in asset accounting so many transactions. That make it little complicated. Correct. That is the first point. Second point is in asset accounting. Now suppose we have assets are there. Now there is a balance sheet is there. Okay. Now the balance sheet is there. You know balance sheet now. In the balance sheet there will be assets side will be there, and another side is what side?
Liability.
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 Liabilities
Liability.
side is there. Correct. So in asset side, what I do? Simple, no? My sundry debtors will come in asset side or liability side?
Asset side.
Asset side. So my sundry debtors will come in. Correct. Liability side, what will come?
Sundry
Creditor.
creditors.
Sundry
Sundry credit.
creditors. Correct or not? So one single line is enough. All total coming here. That total I am showing in the balance sheet. But you tell me, now assets are there. Can I show one single line? Can I say fixed assets? Fixed
No.
assets total. Can I show like this? XXX.
No, sir.
Will the balance sheet formats accept this? Huh? Fixed assets total can I show here? You cannot show. You have to show the breakup. So fixed assets you have to show clearly, right? What you have to show? Land separate. Correct or not? Buildings separate. Plant and machinery separate. Furniture separate. Correct? Vehicles separate. AUC, asset under construction. Like that you have to show separately, right? That is. So in AP, one account is enough. You can show. In AR, one account is enough. But in asset accounting, compulsory. In AP and AR, not compulsory. But in asset accounting, it is compulsory. Your balance sheet formats demand you to show your assets class separately. Okay. So we have to show the assets class wise. What do you call this? What do you call it? Asset classes. We have to represent in the balance sheet, represent class asset class wise in balance sheet. Is it clear? So it's not one, just cannot create one account, take all the values into one account and show it there. No? I cannot. Okay. Asset class. We are dividing the assets into classes like this. Okay. Yeah. Just 1 minute. Okay. Yeah. So now, so what is the complication here, guys? In asset accounting, we have multiple transactions. In asset accounting, we have to show the values separately for each asset class. Correct? So what is an asset class? It is a group of similar assets. Correct? So a set of similar assets grouped together as a asset class. Correct? So how you are taking their value in your GL accounts. That is a asset class. Okay. So that's why we have many reconciliation flows here. In AP, only one reconciliation flow. In AR, only one reconciliation flow. But in asset accounting, you can have multiple reconciliation. Is that clear? Okay, let me tell you how. So far clear, everybody?
Yes, sir.
Yeah. So this breakup, you know, na? Assets, land value you want to take separately, buildings value you want to take separately, furniture you want to take separately. Okay. Okay. Now I will explain you the reconciliation process in asset accounting. Okay. Put the heading reconciliation process in asset accounting. Okay. So this you will understand if you have understood AP and AR reconciliation. If you do not understand them, this you will not understand. Oh, everybody is clear now? Reconciliation process, guys? Yeah.
Yes.
Okay. So now here, suppose I have. So this is my asset accounting subledger. and opposite what I have? GL, general ledger. Correct? Okay, so here what I do, I create one account, no? Land 1 master record. You understand by this, you know? Correct? Vendor master record,
Yes, sir.
customer master record. Now here is asset master record. You understand the point, everybody? This is asset master record. Asset master record is in the subledger or general ledger?
Subledger.
Subledger. Now I need to connect it to one account. No? I need to connect it to one account, right? Yes. So I will connect it to land reconciliation GL account. Is that clear? Okay. Now what I do? I have multiple lands now. Land 2 also I have. Land 1, land 2. Okay, land 1, my value, land 1 value is 6 lakhs. Okay, my land 2 value is 12 lakhs. Okay, land 2 value is 12 lakhs. So what will happen now? These both are connected to one recon account, correct? These both
Yes.
are connected to one recon. So how much value will come into my so here this will update here also, no? This will update 6 lakhs. It will update here also 12 lakhs. Correct? Agree? Yeah. So total how much will be there in my land GL account?
18 lakhs.
18 lakhs. Is it clear, everybody? Yeah. So this is the way the reconciliation flow will be happening. Just one. So this will be taken up in the total as a 18 lakhs. Okay, good. Same way we have, now I have building is there. Building 1 asset master record. Correct. Asset master record. So now what I am doing, I am connecting to what I am connecting? I am connecting to building reconciliation GLA. Okay. Now, so now this building I purchased it for 19 lakhs. Okay. So now what will happen? Here also I will get. Here also I will get how much? 19. Okay. And this is building 1. Na? This is building 1. So what I do now? I will paste it here. So now I have building 2 is there. Building 2 is there, which I purchased for 23 lakhs. Which I purchased for 23 lakhs. Okay, so how much is coming here? It is coming 20. Okay, so I have same way, I have one more building. Building number 3. Building number 3, which I purchased for only 9 lakhs. Okay, now tell me.
51 lakhs.
So here total how much I will get now?
51 lakhs.
50. Is it clear, everybody? That is. So the reconciliation, so all the land values will go to which account?
Land reconciliation GL account.
All the building values will go to
Building reconciliation
Building
GL account.
recon GL account.
correct. Na? Same way, suppose I have plant and machine. Okay. So I have my plant and machinery. I have my plant and machinery master record. Okay, plant and machinery master record. Asset master record. So this I maintain in my subledger. Na? Okay, this I am connecting to what? I am connecting
Land and
to plant
machinery
and machinery
reconciliation GL.
reconciliation GL. Correct? Okay. Okay. So now what will happen? Suppose this plant and machinery I purchased it for 5 lakhs. Correct? So this 5 lakhs will come here also. Correct? Okay. Same way I have one more plant and machine. Okay. I have one more plant and machine. This I purchased it for 4 lakhs. Okay. This total, how much it will be now?
9
Total
lakhs.
9 lakhs. Right? Total 9 lakhs. So here it 9 lakhs. Clear everybody? That is the concept. So we are having multiple reconciliation accounts. Clear? Good. So far clear everybody? Yeah.
Yes, sir.
Land, buildings, plant and machinery. Yeah. Now here there is subtle here, clear everybody, reconciliation process.
Yes,
So,
sir.
Yeah. Now there is a concept of depreciation here. So this complication is not ending here. It will go further. Okay, it will go further. So here depreciation. So in asset accounting, definitely depreciation will be there, no? Yeah. So what is the entry for depreciation, guys?
Depreciation account debit to asset account.
that
Depreciation expense account is debited, asset account is
credit.
credited. This is generally this is correct. But in SAP, we don't post like this. In SAP, we don't post like this. Instead, we have one more account that we call it as accumulated depreciation account. Okay. So we never post to the asset account directly. We will post to accumulated depreciation. Okay. Now, what is this accumulated depreciation? We need to understand. Okay. So it will not be. So this is general entry in SAP. This is the generally outside world. They say this. This is not wrong, but this is not right also in SAP. So in SAP, the entry will be depreciation expense account is debited. Accumulated depreciation on asset account will be credited. That is the entry. Okay, this is, you understand, this is in SAP. So now what is the entry for depreciation in SAP, guys?
Depreciation expense account attached to accumulate depreciation.
Accumulated depreciation. Okay. Now what is this accumulated depreciation? I will explain. See, suppose I purchased an asset. Asset I purchased for 1 lakh. Now life of the asset is 10 years. Life of the asset is how many years? 10 years. So depreciation is how much, guys?
10,000.
10%.
Yeah, depreciation is at the rate of is 10%, 10%, which is equal to 10,000 per year. Na?
Yes.
So this asset I purchased in the year 2021, I purchased. Okay. So in 2021, how much is the depreciation?
10,000.
10,000. 2022?
10,000.
10,000. 2023?
10,000.
10,000. 2024?
10,000.
So what is the value of the asset in 2025?
60 lakhs. 60,000.
60,000.
Yeah. So this is depreciation.
Depreciation.
This is depreciation expense per year. Correct? Agree? So this is expense per year. Na? Every year this is expense. Correct or not?
It is calculated on 10,000 or suppose 10,000 you have deducted, then it comes to 90,000 and 9,000 like that.
That
It's
we will
SLM
see.
method.
We will see.
Also
Methods we will
expense.
see later.
Yeah.
Right
But
now we will
I'm asking
understand.
just a question.
So methods will come later.
Okay.
Now we are only understanding the depreciation. Yeah.
Okay.
Okay. Now depreciation per year. So what is the accumulated depreciation here?
40.
40,000.
That is accumulated. The accumulated depreciation is cumulated depreciation till date. Correct or not? So every year you add on. What is the depreciation that has been posted on an asset till date? Correct. So accumulated depreciation Accumulated, as they say, accumulation. Yeah, accumulated depreciation is the depreciation posted to an asset, posted to an asset till date. Correct? So what is the net book value of asset now? Net book value of asset in 2025?
60,000.
60,000.
How you got the 60,000? 1 lakh minus
Minus
40,000.
4 years
40,000.
accumulated
40.
depreciation.
40. So what is the formula here? Net book value equal to what? How do you derive the formula now? Tell me.
0% value.
Net book
Value of
value
the asset.
equal to acquisition value. Acquisition value means what, guys?
1 lakh.
Purchased value.
Purchase value. No?
Acquired.
Acquisition value, purchase value, both are same.
Same.
Technical language. Instead of saying purchase value, we are saying acquisition value. Okay, acquisition value minus
Accumulated depreciation.
Accumulated upon
okay,
depreciation.
note down this. This is the formula. So net book value equal to acquisition value minus accumulated depreciation. Okay. Yeah. So everybody understood what is accumulated depreciation?
Yes, sir.
Yeah. Okay. Now we need to understand why this accumulated depreciation is important. Yeah. Why we are not posting like this. Why we are not posting like this. Why we are posting like this. No? Okay. Why we are not posting like this anymore, right? We are posting like this. Why? See, now what will happen is this is the way in which we want. So shall I proceed, guys?
Yes, sir.
Okay. So now imagine this is the balance sheet of the year, balance sheet of 2024. Now always balance sheet we compare like this. Balance sheet as on, we say like this, 31, no, balance sheet as on 31 03, right? 2024, okay, or 23. Okay, this is balance sheet as on, let us compare like this, 03 2024, suppose. Okay, balance sheet is as on date, no? Always. Yeah, and we compare with last year always. Yeah? What are the assets last year? This year what assets are there? What did you do? Did your assets increased or decreased? Correct? No? Yeah.
Yes.
So in the balance sheet, I have asset side is there. I have liability side is there. No? Both are there. Liability side. Okay. Now here also I have asset side. Assets side is there. I have liability side is there. Okay. Now here I am showing like, I am showing my asset side. I am showing here. I am showing. I'm showing the right. Okay. So here what I am showing. Here I am showing my accumulated depreciation. Suppose if I am showing like this, no? So this is okay. This is my land value. This is my buildings value. This is my plant and machinery value. Okay. Now if I am suppose here if I am taking these values, no? If I am taking these values into okay, let me show. First let me discuss this. Okay. So what I am doing here is, now accumulated depreciation I am taking into the account separately. Okay. Accumulated depreciation I am taking into the accounts separately now, right? So on land there is no depreciation.
Yes.
So on buildings there is depreciation, right? So what I do, let me copy this, and let me paste it here. So this is my buildings wise. I have I have accumulated depreciation on buildings. Okay, let me show. This is accumulated depreciation on buildings. So my depreciation that is posted on building 1 is, suppose if it is 3 lakhs. Okay. My depreciation posted on building 2 is 5 lakhs. My depreciation posted on building 3 is 1 lakh. Okay, 1 lakh. Okay, total how much depreciation is there? So all this
9
will
lakhs.
come to accumulated depreciation on buildings. Understand? So all this will come to accumulated depreciation on buildings. Okay. So what will come here? Here it will come 3 lakhs. Here it will come 5 lakhs. Here it will come 1 lakh. So total accumulated depreciation, how much I can see, guys?
9 lakhs.
9 lakhs I can see. Got it? 9. Clear? Same way I have the plant and machinery. So this is minus, no?
Yes.
Minus, right? Accumulated depreciation. No? This is the opposite side. This is asset side. This is opposite side, right? Agree with me?
Yes.
Yes.
This is depreciation, no?
Yes.
Okay. Yeah. So this is depreciation on building. This is depreciation entries, no? This is depreciation, accumulated depreciation. Okay. Now, same way what I do, I will copy this and let me take down the depreciation. So plant and machinery, I posted 80,000 depreciation. Plant and machinery to 50,000 depreciation. Total it is coming to accumulated depreciation. Okay, plant and machinery 1. Machinery master record 1. Na? Plant and machinery 1. Plant and machinery 2. Plant and machinery 1. Plant and machinery. Okay, no confusion. So here what I am doing, this is my accumulated depreciation on plant. This is my accumulated depreciation on plant.
Yeah.
So how much is coming here? 80. How much is coming here?
50,000.
50. Correct? But so total how much is coming here?
1,30,000 minus.
1,30,000 minus. Correct? This is minus, no? Clear, everybody? Yeah. So my asset acquisition values are flowing separately. My depreciation values are flowing separate. Correct? So this part you understood. One more reconciliation flow. So acquisition values flowing separately into asset accounts. Accumulated depreciation values flowing into separate asset. Right? Plant and machinery. Accumulated depreciation on plant and machinery. Accumulated depreciation on buildings. Land, there is no depreciation, so no problem. Is that clear? Yeah. So end of the year, what I do? End of the year, I will take these values. Okay. So end of the year, what I do, guys? I will take these values. What I do? So land, I will take 18 lakhs. Buildings, I will take 51 lakhs. And then plant and machinery, 9 lakhs. Correct? Yeah. So then what I am doing? Then accumulated depreciation on land 0. Accumulated depreciation on
Buildings.
buildings is 9 lakhs minus, and then 1,30,000
On
minus,
plant
right?
and machinery.
Okay. So what I do when it comes to the balance sheet, no? This everybody understood, guys?
Yes, sir.
Yes, sir.
Okay. Let me go. So I'm going, it's going to be little complicated, guys. That's background noise. Okay, so I'm coming back to my balance sheet. Yeah, balance sheet, asset side. Assets. Is somebody talking?
Yes, sir.
Yes.
We can't see the names.
Okay. So balance sheet as on 31st March 2024. Yeah. So asset side, I'm saying like 1 minute. Okay. Okay. Now, so asset side, I'm writing like this, guys. So I'm drawing the line here. I'm drawing the line here. So here I'm drawing the line like this. So asset side, I'm saying land. Land value, how much? 18 lakhs. Agree? Okay. Buildings value, how much, guys?
51 lakhs.
51 lakhs. Okay. Then, fine. Happy, 51 lakhs. Next, plant and machinery, how much, guys? Plant and machinery, how much? How much we have taken? 9 lakhs, no? Yeah,
Yes.
9 lakhs. Okay. Now next on liability side, what I do? I show like this. Accumulated depreciation. Accumulated depreciation on land is 0, right? Land 0, right? And no
Yes, sir.
depreciation, no?
No.
Okay. So on accumulated depreciation on land is not there. Buildings is there directly. So buildings, how much is there?
9 lakhs.
Okay, 9 lakhs is there. 9 lakhs minus, yeah, understand. Okay, accumulated depreciation on plant
And
and
10 machine.
machinery, how much
1
is
lakh
there?
30,000.
1 lakh
1,30,000.
30,000
Minus.
minus. Yeah. This is the way we show in the balance sheet. Understand? Okay. So what is the advantage in showing like this? This you have to understand. Why we accumulated depreciation, so much focus is there. Okay. Right. Now. Right. So we show the total values on the asset side. Asset side, we will show all acquisition values. Is that clear? We are not showing net book values. We are showing acquisition values. All the depreciation we show opposites. Is that clear? Okay. So now same way what I do, I copy this. Okay. Last year, what was the situation? Yeah. So let me copy this. Let me copy this. Let me paste it here. Last year, my land value was
16.
12 lakhs only. Last year, my buildings value was 43 only. Last year, my plant and machinery was 5 lakhs only. Right? Last year, my accumulated depreciation was 7 lakh 50. Okay. Last year, my accumulated depreciation was 90,000. Okay. So like this, we will get the clear picture. Now you will answer so many questions. This is the last year figures. This is the this year figures. Okay, guys. This is the last year figures. The this year figures. Last year 2023. Correct. This year 2020.
20,000.
Okay. Now you tell me how much land I purchased this year.
6 lakhs.
6
6
lakhs.
lakhs. Correct. How much buildings I purchased this year?
8 lakhs.
8
8
lakhs.
lakhs. How much depreciation on buildings I posted this year? Depreciation on buildings. How much I
1 lakh
posted?
50.
Huh?
1
2 lakh.
1 lakh 50.
1
1
lakh
lakh
50.
50 because this year accumulated is 9 lakhs. Last year it was
7
7
lakh.
and a half. So 1.5 lakh depreciation on buildings clear na? Depreciation also clear. Acquisition also clear na? Is it clear, everybody?
Yeah.
Okay. How much depreciation I posted on plant and machinery? How much
40.
depreciation? 40,000.
40,000.
Correct. 40,000. Is that clear? How much plant and machinery I purchased this year?
4 lakhs.
4 lakhs.
4 lakhs. Is it clear? What you are purchasing? How much depreciation? Everything is clear. That is the advantage of accumulated depreciation. Imagine now what I do, I copy all this. Suppose now accumulated depreciation is not there. Okay, guys. Suppose my accumulated depreciation is not there. Yeah. So my accumulated depreciation is not there. Suppose I am not doing this way. I am doing the other way. No? So directly I am deducting from my asset account. Yeah. So if I am doing directly like this, so what will happen? This will not come. So what will happen here? Land will be there. Here buildings minus, what will happen? Minus,
Depreciation.
what is
9
it?
lakhs.
9 lakhs.
9
9
lakhs.
lakhs.
9 lakhs. How much you can see?
40.
40.
2.
Uh,
42
okay.
lakhs.
Yeah, 42 lakhs you can see. 42. Correct. Directly you can see 42 lakhs. You will not see all this, no? Correct or not? Okay. So what will happen here? This will be 9 lakhs minus
1
1
lakh
lakh
30,000.
1 lakh 30. Directly you are deducting now from your asset account. So what will come here?
7 lakh 70,000.
7 lakh 70 only you can see. Okay. Right. Okay. So what will happen now? This you will not show. No, assets, liability side blank. Agree? Because already you have deducted from your asset side, no? Understood, everybody?
So,
Okay. This is one way. If you are not using accumulated depreciation, this is the way it will come. And here what will come? Here what will come? 12 lakhs. This is minus
75,000.
7
75.
lakh 50,000. How much it will show now? 45, 35,
35.5.
5. Yeah, 35, 50,000. Is it clear? Yeah. So this is only this you can see. Okay, this one
4
5
lakh
lakh
10,000.
4 lakh 10.
Fine.
Okay, so now this all it will not show, na? It will not show because accumulated you are not using, right? Okay, now tell me, now answer the same
Direct.
questions. Both are same, na? Actually, the net effect of this balance sheet, that balance sheet is the same, right?
Yes, sir.
But can you answer the questions now?
No.
No.
How much buildings I purchased? Do you have an answer? How much depreciation I purchased on plant and machinery? Do you have an answer?
No.
answer. That's why accumulated depreciation becomes important. Is that clear? So balance sheet as on this without
mm,
accumulated
Okay.
depreciation. Is it clear? Right. Okay, this is with accumulated depreciation, the top one. This is with accumulated depreciation. Okay, I will give you time, guys. Now, I hope everybody understood this concept, the importance of the accumulated depreciation.
Yes.
Okay, right. Note down this, compare it, you will understand better. This is without, this is with.
Wait, sir. Noting now.
Yeah, note. This is not SAP. What I am discussing now is not SAP. It's the preparation for SAP. Yeah, asset accounting, you should know what is accumulated depreciation, what is net book value, how we are representing in the balance sheet. When you know only, you will understand. Noted?
Yes, sir.
Okay, shall I show you the without accumulated depreciation? No, no. So only net book values. Sorry, here it is not acquisition values, it is net book values. Correct, no? Net book values. Only net book values because you are deducting the depreciation directly from asset, no? That's yeah, Dharanishri, I have unmuted you already. I don't know why you are not able to speak. Okay, noted, completed, everybody?
So,
Yes, done? Okay.
sir, can you scroll down the screen?
Start.
Starting?
Yes, sir.
This is depreciation related. Yeah? Okay, then this is our
Yeah, sir. Here, plant and machinery 1 asset master record and plant and machinery 2 asset master record. There it's 4 lakhs or 9 lakhs.
4
Second
lakhs
one,
and
sir.
9 lakhs. Yeah, this is
4 lakhs.
4 lakhs. 5 plus 4, no? Yeah.
Sir, scroll down.
Just one. So the top part you want?
Yes, sir.
So we are having all these transactions, no? Yeah.
Okay, sir.
All right. Okay. Clear, everybody?
So,
Right. Okay. This is it. See, guys, this asset accounting topic, even if you have any backlogs, correct? Even if you have an AP backlog, AR backlog, GST backlog, bank cash and cash accounting backlog, it will not create any problem. You can start. So those who have any practice backlog, now you can start from asset accounting. This is a new topic altogether. If you just have your company code, that's enough. 21 steps you have now, that's enough. You can start with asset accounting. Is that clear? So those who have backlogs, any backlog is there, leave it now. Leave it. You can do that backlog clearance later. Focus on asset accounting. Okay? Yeah, this will not, your previous backlog will not impact you in any way here. Okay, you can start fresh with asset account.
Hello.
Oh, yes.
Sir, scroll up, sir. Starting.
starting. Yeah. Yeah. This is what you want?
Yeah. Some are down.
Yeah.
1 second.
Yeah.
Let me scroll up, sir. Yes, sir.
Okay.
Yes.
Right. Right. So next we need to talk about something called depreciation areas. Okay, depreciation areas. This is another complication. Depreciation areas. Okay. And then we will talk about configuration. So tomorrow, practically, we will start the asset configuration part. So as we did for every topic, we do configuration. Now we have to do asset configurations. Okay. Yeah. So we'll not start now. Depreciation areas concept also I will discuss tomorrow. And configuration also I will start tomorrow. So tomorrow practicals will start. Asset accounting practicals. Okay, guys?
Okay,
yeah. Okay, guys. Thank you. Then we'll meet tomorrow. Thank you.
Thank you, sir.
Thank you, sir.
Yeah, thank you, everybody. Yes, there any problem?
Thank you, sir.
Doing PRS, and I realized that after doing all the configuration, I'm unable to post my invoice, either vendor or customer, because it says that it requires a tax code. So I cannot post it without tax code.
It is only yellow warning. No? It should be yellow warning. Yellow warning. So see here, you need to tick in your accounts FS00 in your expense or revenue GLs. You go to your company code ZAPL. You go here income account, sales revenue account. Then you should stick this. No? In this you this you have to
Posting with Excel.
Without tax allowed. Okay, I will check this one.
If you tick, then it will permit. Yeah.
Okay. Thank
Okay,
you.
guys. Thank you. Then we'll meet tomorrow. Thank you.
Thank you, sir.
Yes, thank you.
Yeah.